Good evening, everyone. Welcome to Markets with India's weekly podcast. This is Rajshekar Kongari, Equity Research Analyst at William O'Neill, India. In this podcast, I'll be discussing about market movements during the current week, which major events impacted the global and Indian markets, and I'll close the session by giving an outlook for the coming week. Let's start by analyzing Nifty's daily chart. For the current week, Nifty was up more than 2% after three consecutive sessions of upward movement of more than 1% on each day. On Thursday, Nifty succumbed to profit booking. It was down more than 1% on volume lower than previous session. Today, the fall was on volume higher than previous session. Hence, we have considered it as a distribution day. Current distribution day count is elevated to 5. Hence, we have turned slightly cautious while adding stocks to our model portfolio. Major event which impacted Indian markets was the announcement of Union Budget on February 1st. We had done an extensive webinar to explain Union Budget and its sector implications. It is available on our YouTube channel as well. Here, I'll discuss about how government makes money and how it spends. Within receipts, we have capital receipts and revenue receipts. Taxes, GST collections will come under revenue receipts. Borrowings will come under capital receipts. GDP growth rate for current financial year is estimated at 9.2%, which is the highest growth rate among major economies of the world. On tax front, no major changes were made. No changes in the tax slab structure, which many people were expecting. However, profits made on virtual assets like cryptocurrencies, NFTs will be taxed at 30%. Coming to the spending pattern of the government, it is estimated at 39.45 trillion of expenses for FY23 budgeted estimate. Within the expenditure, we have revenue expenditure and capital expenditure. To explain revenue expenditure, for a household, paying home rent, electricity bill, and water bill will come under as a revenue expenditure. Similarly, Government of India will also have expenses like interest payments, subsidies for government-sponsored schemes like Manrega, PM Kisan, PM Awas Yojana, and others. These will come under as revenue expenditure. The major highlight of this budget was 35% increase in allocation towards capital expenditure from 5.5 trillion last year to 7.5 trillion for FY23. Capital expenditure is a crucial element of the budget because capital expenditure will generate value in the longer term. Laying roads, railway tracks, ports come under capex. With the higher capex, private investment will also come into the country, which will create job creation and which will have a multiplier effect on the economy. Hence, it is considered as a crucial element. Coming to the major event which shook the global markets was the crash of Facebook's Meta stock, which was down 26%. On Thursday, they have announced that their active daily users have come down for the first time in its history. This was taken very badly by the investors and the stock crashed 26% yesterday. In market cap terms, market cap erosion was more than $200 billion. To put that into perspective, India's top market cap companies are Reliance and TCS, which have market cap of around $200 billion. In a single day, a single stock has lost such market cap. It had a huge impact on other IT-related stocks and NASDAQ also. Coming to the outlook for the next week, you can see Nifty is trading near its moving averages. It is crucial for the Nifty to reclaim its 21 and 100 DMAs for further upward movement. However, on the downside, if a few more distribution days added in the next week, we might change the status to downtrend. In downtrend, we do not take any fresh positions. We book out stocks which are weak in our model portfolio. Thanks for joining our weekly podcast. Have a happy weekend.